Hello and welcome to this weekly video edition in coordination with Orbex. Beginning with the US dollar, and despite the fact that the index closed last week slightly higher, it is still trading within our trading plan mentioned in our previous reports. The index failed also to break above the 101.70 resistance area and slides back all the way back to 11 or 100.80. However, on Friday it managed to rise again at the end of the day due to the announcement of the press conference of the US president. However, this doesn't change the fact that the index is forming a bearish outlook or a bearish formation, which we'll be basically discussing it very shortly. But the economic condition in the US remains basically positive. But the Federal Reserve showed some sort of a retreat last week, saying that they might raise the rates basically twice this year, while the talks in December were showing a possibility of 4 rate hikes. However, it's very also early to judge, especially that we don't know yet what's the new administration fiscal stimulus plan. Another interesting topic last week was gold and silver. Both also were trading within, or so far as they are basically trading within our trading plan outlined in our previous report. Gold basically spiked above the predicted levels, and also, or so does the silver, and this is also on the back of many factors: high demand and global uncertainty, and more importantly, the gradual increase in inflation across the board. As for the week ahead, there are few economic releases which may have a notable impact on the markets, yet the uncertainty over Europe and especially the French election is likely to keep the volatility on the rise. On Monday, we'll be watching the Spanish inflation data, which is set to rise again or further by or toward 3.3%, which would be the highest since 2012. As for the US session, also traders need to keep an eye on the core durable goods data in addition to the pending home sales. As for Tuesday, another set of inflation figures will be released, but this time from France and Italy, and the estimate seems to be very positive. As for the US session, during that day we'll be watching the GDP, the Chicago PMI, and the CB Consumer Confidence Index. On Wednesday, traders also need to be very careful in Asia, as we'll be watching Australia's GDP and China's PMIs, including the manufacturing and the non-manufacturing, and the Shenzhen Manufacturing Index. But in Europe, we'll be also looking for the manufacturing PMI for most of the Euro countries, in addition to the jobs report in Germany. But above all that, we'll be waiting for the German inflation data as well. As for the US session, eyes should be on the core PCE price index, which is the most favorable index for the Federal Reserve, to measure, or which basically measures the inflation. And this is aside from the personal spending and the personal income, the US crude oil inventories, and the ISM manufacturing, which will be also released during the session. But finally, the Canadian, or in Canada, the Bank of Canada is set to keep the rates on hold at 0.5%. On Thursday, nothing much on that day, but traders need to keep an eye also on the Eurozone inflation figures, in addition to the UK construction PMI, as those will be the most important figures of the day. Finally, on Friday, another set of inflation data also will be released. It will be basically the inflation week from Japan, in addition to the services PMIs from all over Europe, and finally, we'll be watching the ISM non-manufacturing PMI, in addition to some remarks by some of the FOMC members, including the Federal Reserve, or the Fed Chair Janet Yellen. So these are the most important events that you need to keep an eye on this week. And now, for the time being, let's have a look at the technical chart of the week ahead. Beginning with the US dollar index, and as I said earlier in this video, that the US dollar index is basically is possibly forming a head and shoulder formation on the daily chart, which a little bit needs some more confirmation, of course. But for the time being, the left shoulder is already in place, which is basically was back in November of 2016, and the head is almost around the top that we've seen this year, also at the end also of December 2016, around 103, 103.50. And so far we had this line, which is unbreakable so far, that we've seen also for the past like more than 2 weeks of continuous trying or continuous attempt like to break, but so far we haven't seen any break of that level, and since then we've been declining. But for the time being, the 101.50s, 101.70s is basically represents maybe the possible right shoulder. At the same time, there's some sort of a double top here on the daily chart, which is, again, it could be one of the main elements of the head and shoulder formation. So far, I still believe that there is a possibility for more
downside ahead. Last week rally, which is like the at the end of last week or Friday, it was due to the announcement of Donald Trump's unscheduled press conference. So I still believe that there's a possibility for a very slight maybe retest of last week's high before the downside resumes. So keep this formation in mind because we will definitely need it in the next few days and in the next few weeks. But of course, the neckline is not, it's far away from here. At least it's going to be somewhere around like 99. But keep an eye on this one. We will be watching it very carefully. So going now into our beginning with the Kiwi that we basically added it to our technical chart for the past 3 weeks. Again, we haven't seen any break above or 2 weeks ago we haven't seen a break above the resistance area, which is very solid so far, 73.05, 73.20s, and since then we have been declining. But last week we had a doji sign on the weekly chart, which is a little bit positive. But however, technical indicators are not suggesting any kind of a huge bull run coming up next. So I still believe there's a possibility for more downside ahead as long as we stay below the 73.05. The same scenario actually occurs for the Aussie. The Aussie for the past 3 weeks, we've been trying to break above that area, which is between 76.30s and also 77.20s without any chance. There's also three doji, we might say, doji candles at the same time, which is more importantly, the most important thing here is that the technical indicators is heavily overbought. So that's basically, I think that there's a possibility again for more downside ahead with a stop maybe above last week's lows, last week highs. Sorry. Going into also the euro. The euro basically made a very interesting move last week, as we mentioned in our previous report. Despite the fact that we went above the 50-day moving average, however, we went all the way back to 61.8, and this is the second time that we test this one. And then we also again rallied all the way to the 50-day moving average, but Friday was not that good because of the rally in the US dollar. But it is still below the 50-day moving average. But I still speculate some more support coming up ahead, especially that we will be waiting for the inflation data later this week from the eurozone, which is expected also to show more upside. So I still believe in the euro for the time being. We might see more upside, but we need to see whether if it's gonna stay above the 61.8, which is also at 105, 105.30, 105.20s. Keep an eye on this level because I still believe they might see another bull run ahead. Dollar yen continued also again to all the way down. We had huge stops around like 111. It was 113. Sorry, it's taken out, and then it continued all the way back to 1250, 15. But at the same time, traders again should not bet that much on the dollar yen for the time being, especially the 100-day moving average is approaching, and the downtrend is already broken. So we might see some sort of a reaction around the 100-day moving average, which complements with a trend line, and also 38.2% Fibonacci, which is around 1158. So you need to keep an eye on this. Yes, we might see some sort of a downside, but it will be very hard to break through that support because it will be a technical breakdown, which will basically, I guess, was going to continue and might even renew the downside trend, which is from a technical point of view, if we just added another trend line in here. So I believe there is a possibility to bounce off the 100-day moving average, which should be watched very carefully. Going into or forward into the British pound. The British pound actually also continued to trade it again within the same tight range. We have a solid support on 124.28, as I mentioned last week. We bounced off the 100 and the 50-day moving average, despite the fact that the technical indicators are still negative on most of the time frames. We had a rally on Thursday and then another breakdown on Friday. That's why it is still actually kind of weak to get into a trade for the time being. But in general, you know that the British pound outlook is still bearish on most of the time frames because of the Brexit, and we're approaching also March, which is supposed to trigger the Article 50 to leave the eurozone. So this is basically again the selling the rallies remains the main strategy for the time being. But we need a break below the support that I mentioned here, the 24 80s 28 or 24.30. Going into also gold. Gold continued to trade within the same trading plan that we mentioned since the beginning of this trading series. We already closed above the 100-day moving average. Another test that was a week ago, and then continued to consolidate, and then broke above that resistance and continued all the way up. And now we're above even the 1251, which was supposed to be a huge resistance here, but it was a positive breakup and a breakout, which basically keeps the chances higher right now to test the 1262. 1262 is a very important level to watch, which is the 200-day moving average, and is most likely to see some sort of retracement from that level, but a break of which is likely to set another rally all the way to 1270s and even more than that, because this level will be a very strong resistance to watch. Finally, the US equities. I'm not touching that. I'm not willing to touch it anytime soon, because again, the continuous rally with no reasonable retracement for the time being, it's just scary. I mean, even on Friday, we started the day lower and then all the way higher, closed the day almost unchanged. Technical indicators are just heavily overbought. So I still believe, again, stay away from the US equities. And as I said before, I'm still with most in the or with the European equities are much better than the US equities for the time being, until we see some sort of, at least, of a retracement or any kind of a bearish sign in order to start shorting from there. So those are the technicals for this week. And if you have any questions, you can leave it below. So this is it for the week. Thank you for watching again today. We will have also a webinar tomorrow on Monday discussing gold and silver prices for this year. So make sure you register through Orbex website, and you can find also the links below this video. If you have any comments, feedback, or question, you can also leave them below. Also feel free to share the video on your social media platform if you like it, of course. So this is it for today. Thank you for watching, and have a good week ahead.